What's going on, guys? Welcome back to the channel. My name is Anfernee, and in this video I want to do a step-by-step breakdown on how to do a feasibility analysis for someone who's trying to get started on the small business journey. Now, a feasibility analysis is not just for large corporations or even companies that are making money already. The whole purpose for a feasibility analysis is to see if your idea makes sense in the first place. So if you have any aspirations of starting a business of any kind someday, then this video may serve as the blueprint to getting that idea off the ground. So if you do think you'll go on to find any kind of value in this video, then tap that like button for your boy, as it really does help the channel out and allow these videos to reach a little bit of a larger audience. Also, if you want to get a little bit of a treat from watching this video already, then go down into the description below, where if you sign up to the public app, they will give you a free fraction share of a stock just for signing up and creating an account. And the first part of your feasibility analysis, although this necessarily won't be the first step, is going to be the executive summary. And what the executive summary is, it's going to be a 1 to 2 page summary, basically breaking down all the analysis that you do later in this video into 1 or 2 short pages that acts as proof that there's a market for your business and that you have a product that people will want to buy. So this is just going to summarize all of those analysis so that you can give it to an investor if you have one, or that you can read back to yourself when you're actually ready to start and structure your business. And essentially the first actual step that gets you to work with your feasibility analysis is going to be the step summed up as the business concept step. Now this step is fairly simple. What you're going to be doing here is brainstorming and basically thinking of what your business is going to be so that you have a sense of direction of where you want to take your business. I know when you're just getting started as an entrepreneur, your ideas can take you in a lot of different directions. You may want to sell this product, you may want to offer this service, and you may want to grow as big as you possibly can. However, thinking too big in the very beginning can lead you to being overwhelmed and lead you to not taking any action in the first place. So this step is really meant to cater your one most passionate idea, and it allows you to focus on that 1 or 2 services that's going to bring you the most revenue in the very beginning so that you can then expand into other revenue streams. So the business concept step can be broken down into 4 main questions. The first of those questions is, what is the business? This one is fairly simple. You're basically going to be defining what type of business you're going to offer. Is it going to be a content creation business? Is it going to be a Shopify store? Is it going to be drop shipping? Is it going to be selling things on Craigslist or Facebook Marketplace? This question really allows you to see what industry you're going to be in and how you plan on entering that industry. And the second question you're going to answer in this step is going to be, who are the customers that you're targeting? Now this question has a hidden, even more powerful meaning, because when you're just getting started as a small business owner or as an entrepreneur, you may think that you're going to get your initial influx of supporters from your friends and family. Now for some people this is true, but in reality your main interests and your main passions that you're going to be starting your business about may not align with your friends and family's passions. The reason for this is that you tend to have an emotional connection with your friends and family, and because of that emotional connection, you guys share a life and experiences outside of monetary or financial gain. However, when you start a business, this is typically where the differences between your friends and family start to arise, because everyone doesn't like the same things. And my point here is that when you go into starting a business, don't expect your initial influx of supporters to be from your friends and family, because if you want your business to be sustainable, then you have to go after your target audience that will continue coming back and providing revenue regardless of your emotional connection to them. And then moving on to the third question of the business concept step, this question is going to be, what value do you offer? What is the value proposition that people will give you money for? For example, if you have a YouTube channel where you create content for free, the value proposition here is that you're going to create content that people are going to watch, and then by watching that video you will get paid through Google AdSense. However, your value proposition in a different industry could be that you're going to provide refurbished furniture for a low price, lower than any of the competitors in the market, so that people find more value in your product and then they want to spend more money at your business. So take a little bit of time and really think about what value you can offer that people will give you money for. And it doesn't have to be anything extremely revolutionary. You can have the same exact product as someone else, but if you brand it uniquely and if you make it an extension of yourself, then people who relate more to you may be more likely to spend money with you. And then the last question you want to ask yourself for the business concept step is, how will the benefit be delivered? Will you be offering a strictly online digital service, or will you have physical products that you will need to ship and then account for overhead, shipping, and other costs like that? In the digital age as we're in now, it is very easy to start a business with just a camera and a computer. However, if you want a little bit more of that traditional brick and mortar style business, it is important to take note of that in this step now. However, moving on, the next step of your feasibility analysis is sort of going to be a compound analysis of 2 different segments, and the first of those segments is going to be an industry analysis. Basically, in this step, you really want to break down whether or not there's a market for your business, whether or not there's a market for your product, and if there is a market for it, you're going want to define if that market can support your business that you're trying to pursue or not. So if you have a very unique business and that market is really small, only a couple of hundred people, then even if your business gets 100% of the market of that particular industry, it may not be enough to support your business full time, simply because there are not enough people interested in that unique market. However, once you identify your market, what you then want to do is a customer analysis within that market and see if the customers will actually be interested in your product or service. As we know, markets can be really broad, but the customers within those markets may have specific interests, and just because you enter into that market, you may not find a lot of support from the customers within that market. So in this part of the analysis, what you want to do is define your target customer in a segment of the market that has the lowest barriers to entry but the highest potential profitability. And then once you define this customer, you then want to provide an overall estimation of what the demand would be from this particular customer for your product. You probably won't find any exact numbers, but if you put yourself in the customer's shoes, you may be able to get a fairly good understanding of what that customer might want or what that customer might buy given what is placed in front of them. And moving on to the next step of your feasibility analysis, this next step is called the genesis or founding team analysis. And what this step consists of is taking an internal look at your own qualifications or your own passions and seeing what makes you qualified to run the business that you're attempting to run. Now, a lot of times when I say qualified, it doesn't mean that you have to have any professional qualifications, but more of what I'm trying to say here is that what internally motivates you to run this type of business. Are you doing it just because it's trending? Are you doing it just because you want to make money? Or are you doing it because you're really passionate about the idea that you're creating? In this step, even if it's just you, write down the interests of the people that are founding the company and write down why they have those interests. Understanding the motivations behind the founding team will provide a great foundation for a new business, because even if it doesn't make a single dollar in the first 6 months or the first 5 years, if the founding team has a strong motivation for running that business and making it successful, then over time, as they create the product, the people will come. However, if the founders, even if it's just yourself, are only out to make a quick dollar, then that business will most likely have a very short lifespan. And then what you want to do next is perform a product or service analysis to see how well your specific product would do within the industries that we talked about in this video so far. In this analysis, you want to ask yourself, how will you get your product that you want to sell? How expensive would that product be to make, ship, and replace if anything is broken? If you're offering a service, how long will it take to complete one product for the service? How do you intend to scale your business up if you have a large influx of customers in the very beginning? And also, what is the competitive rate for your product or service, and how do you intend to price or market your specific product? So these are questions you want to ask yourself in the product analysis part, and it will start to give you a good idea of how feasible your product actually is within the overall business atmosphere. You can do this entire analysis, but if you have a bad product, you will not have a successful business. What is sort of good here is that if you don't think your product is all that successful, you may be able to switch the product to a new product with the same business plan and then have a successful business. That is why doing a product analysis is important and making sure you have a winning product from the very beginning. And one of the last steps you're going to take for your feasibility analysis before you make your decision is going to be your financial analysis. Now, this one is fairly simple as well, but it can be a little bit complicated with more complicated businesses. But for this specific analysis, what you're going to do is try to calculate how much money you're going to need before your business can create a positive cash flow. So as I go back to YouTube a lot, if you are starting a YouTube channel, some of the things that you might need to start up your channel would be a camera, a microphone, maybe even a computer if you don't have one, and even a couple of lights. And if you need all of those things, what you want to do is try to put an overall price tag of that and see how long it will take for you to make a positive cash flow given that initial outflow of cash. And sometimes if you have a flipping business or if you have a lawnmower business, you'll need to try to calculate the money that you need today before you actually start being profitable on the overall business. However, after you do this last analysis, it is finally going to be time to make your feasibility decision to decide whether this business is feasible or whether you may be better off pursuing another option. So here's a time where you take all of the data that you gather and then use it to make a decision on whether you're going to pursue the business or not, and then combine it all into the executive summary that we talked about at the very beginning. And with all of those analysis done, if you think your business is ready to go, the last thing you want to do is set a timeline of when you want your business to be created and then do your best to follow that timeline. However, with all that being said, I really hope you enjoyed this video. If you found any kind of value in this video, then don't be afraid to tap that like button for your boy or hit that dislike button if you think I missed some really big important parts of a feasibility analysis. Like I said, if you want a little bit of a thank you gift for watching all the way to the end of this video, then head down into the description below and sign up to the public app. You will get a free fractional share of a stock just for signing up. However, I hope you enjoyed this video and I'll see you in the next one, guys.